If your business has an SBA loan, is looking to apply for an SBA loan, or has a traditional loan, there are certain requirements that you may be overlooking for an audit. Missing these requirements can put you in serious trouble or even technical default of your loan requirements. My name is Derek Jahn. I'm with Francis S. Infurchia CPAs, and I'm going to talk to you today about SBA and bank loans, which ones require audits, and what lenders are actually looking for, and the risks that come along with noncompliance. Let's start with what actually triggers an SBA loan requirement. So, contrary to prior belief, the SBA program doesn't necessarily have audit requirements, but how the SBA program does work is you apply through this federally sponsored program, and these federally sponsored programs work with lenders of their preferred choice, and what the lender requirements have certainly are audits sometimes or reviews. They'll require certain compiled financial statements, sometimes even quarterly financial statements. These audit requirements or review requirements are going to vary greatly by lender. So you may have to report more information. You may have to report more frequently if you are have a higher loan or you're a higher risk borrower. There are situations where the lender wants additional assurances that your financial statements are free from material misstatement, which would be an audit. Audited financial statements really give the lender the assurances they need to make sure that you're not over leveraged or at risk of default on your loan. So really, again, it's important to read the fine print in your lender agreements, right? You want to make sure that you're meeting those requirements and just to make sure that you have everything covered. So what really do banks verify in an audit? What are they really looking at? So it's not really just a formality. Lenders really use the audits to verify that your financial statements are free from material misstatement and that you're accurate, the financials are complete, and that the cash flow can really support the debt that they're servicing to you. They really want to make sure you're meeting your debt to income ratios. They want to make sure that you're meeting your loan requirements. So these things, even further include debt service coverage, liquidity, debt to income ratio. They will even look at some of your historical trends. If you have a loan that's, for a large number of years, 10 years or so, they may want, historical financial statements, or if you have a track record of having audited financial statements, they'll look at them comparatively and look at your revenue and your gross margins over the years. They look for red flags, right? Do you have declining margins? Are you making the same amount of revenue or more revenue each year, but your expenses are skyrocketing and they're out of control? You're going to have declining margins, and that's really a concern that you're not making the money and managing costs like you should be. They're going to be looking at your operation, your operating cash flows, making sure you're able to meet those debt service requirements. At the end of the day, really, the audit for a bank really gives the lender that assurance that they're looking for, that the business can meet those debt obligations as they're coming due. Okay, so why does this really matter, right? Let's say a business is not completing their required audit. Even if they're making payments on time, technically they're not in default of making those payments, but they may be in default of meeting the debt covenants that are required by the lender agreement. So again, read the fine print. You should really understand what it says in your lender agreement before actually executing the lender agreement. So if you're missing your audit requirements that are in the fine print in the lender agreement, really, what could happen is you're at risk of default. You're technically in default even though you're making your payments on time. At that point in time, the bank really has a right to step in and kind of do as they please with the loan. They could call it. They can increase their oversight. They may ask for quarterly reported financial statements or quarterly reviewed financial statements by an independent CPA. So really, it's when you're in default, you're really at the mercy of the lender to really kind of you need to step up and do the right thing. So really, instead of creating problems, an audit is really going to help you. An audit or a review really will, really give you some insight into your financials. We're typically the first ones to to notice whether or not your financials are trending in the right direction. We tend to identify cash flow issues, sometimes even before the business owner does. So really, what are the risks of non-compliance? So again, as I discussed, technical default, right? Even though you're making your payments on time, technically you're in default because you are not complying with the lender agreement. Again, second, lender action. This could mean stricter terms. If you have a variable interest rate, there may be a clause in the lender agreement where they can increase your interest rate. Again, they could increase the frequency of their oversight. So that means they're going to be breathing down your neck a little bit more. They're going to be really looking out for you as a high risk now person who has a loan with them. So what's the key takeaway here? Here's the bottom line. If you have an SBA loan or a bank loan, don't assume just because you're making payments that you're not at risk for default. Again, as a reminder, you need to read your loan agreement, read the fine print. If it's really for a substantial amount of money, please contact an attorney to help you understand it. Please contact a CPA to help you understand it. Understand your reporting requirements and confirm whether or not an audit or review or just submitted financials are required. Again, read the fine print. So if you have any questions at all and want to discuss any potential loan requirements that you may face, if you're looking to get new financing for your business, if you're looking just for an audit, please contact us. You can call us at any time.